since I'm in a yellow area and my price is over here, I'm in between, I've already cleared this top level here was already mitigated. This is a daily level that was created from over here from 2 days ago. But I have a new one down here from today. So I would place a limit order right over here at 112.9, or let's call it 113, right here, expecting the price to dip down, enter in, and then move up.
But also there's the signals on the dashboard. The signals are useful. Maybe you're someone who doesn't trade with indicators, or you don't really want to mess around with that, but you want to know for bullish what the call is right now. The dashboard is showing you those signals. Am I right about that?
Yeah, that's right. So if we take a look at our dashboard, you'll see here that the signals that come in, even if you're not trading directly, lets you know these are not trade signals, these are trend signals. So lets you know the trend that we're in. And so the last trend that I put out was on July 27th, so last Sunday, and we were in a bearish trend. That's what I had put out. We're in a bearish trend. We're likely to move from 119 to 117, and that's exactly what happened. Total success rate. So these are trend signals. So far, all the trend signals have been perfect. What we don't say, and what I can't say, is in what time frame this should occur. The trend signals just say that this level is likely to be hit, but it can happen a week, a month later. There's nothing we can really do about that. What matters, you might ask, well, Tom, why do you then give the signal if you can't say the time frame it happens in? Well, because usually people have difficulty when it comes to trading, right? You need to know your entry price, your exit price, what you should risk, your stop loss, and your take profit. We already have a bunch of that information already taken off the plate. For your entries, we're very clear on our entries. We enter in on the levels for our indicators, either on our wave levels or on our wave levels or on our anchor levels. These let us know where we should get in. We don't usually get in anywhere other than that. There's no FOMO into any position for us. For our exit signals, we have for exit, we like to hold our positions long, because we want to take as much of the trend as possible, either up or down. What direction you should be trading in, that you also get with the trend signals, if we're bearish or bullish. So you know that if you're going to be taking additional trades on your own, what you should do. So this does a lot of the heavy lifting. The only downside for that is that I can't tell you necessarily the reliability of how long it'll take to get there. So there is a path where you get liquidated before you get to that level. And I can't tell you how many times you should take that bet.
So how do I know when to get out of the trade? How do I know when it's time to take profits?
You got to take profits when you feel comfortable taking the profits. Now, the way that I bet, I talk all the time, I only bet 2.5% of my position every time I enter the trade. And sometimes I'll add more to a position if I'm in the money and it's going in my direction and the charts agree with me, but I've never bet more than 2.5%. And that automatically, because I trade at 50x leverage, is my stop loss. My stop loss is the liquidation of my position. Some other people, you might not want to do that. Some of you might want to trade at 25x leverage, take a larger position in order to make the same amount of money, but give yourself more wiggle room in order to suffer the drawdowns. And some people, it's too painful for them to lose a position, and other ones they're degenerate gamblers, and they're willing to trade this at 125x leverage and see what they can make. All that is up to you. So how you should know when you should exit the position is whenever you feel comfortable. Maybe once you get up to 100% profit, you set your stop loss at 100%, and then whatever you make above that is gravy, and you just trail it or you adjust it as you go along. Maybe you sell a bunch on the profitable positions as you go up, and you don't close it all the way, and you add back more when we get dips, whatever it is. But it all depends on your own trading style and what kind of risk you want. What we don't want to do is miss our entries. Our entries are the most important, because our entries are, generally speaking, the most extended that price will get. If it's a perfect entry, then chances are you're either at or just a little bit away from exactly where the price will bounce off from. And you can't get a better entry than that. This is why I call them perfect entries.
Was 113 or is now a great time to enter a perfect entry?
Well, the perfect entry would have been around For perfect entries when it comes to trend reversals. So while we are always in a bullish trend, the bullish bounce becomes a perfect entry because there are all these stair steps up. So yes, for me, 113 is a great entry over here. But whenever you have that and nearby are other levels, so here one of those levels is the wave level, then the perfect entry is the lowest level, is the furthest of the cluster, because that's where the wicks end up. So over here, the perfect entry was at 111.9, 111.950, which is exactly there. You guys can see it. It's literally right on the wave, right here. This level is the perfect entry, but I also added into over here because I already have my order to enter in when I get to this level over here. That's perfectly fine. Now, the issues that you end up with is that, let's say you were doing 50x leverage and you entered it at 113. You would have gotten liquidated over here. Actually, would you have gotten liquidated yet? Let's see. No, sorry. You would get liquidated at 2% down, right? Because if you're trading at 50x leverage, a 2% move will liquidate 100% of your position. So sometimes the price falls and it goes down more than 2%. You're like, I should not have gotten in there. But that's why you're exactly. That's where I would get back in. And you go and you might ask yourself, how many times should I try to get back in? My rule is my target is usually what I look at other levels that have been unmitigated above me. So for example, over here, I could take a look at this daily level here at 117. And this other level over here, well, it just recently got mitigated, but over here, 117. And depending on how big that move is, this move up to over here is 5%, or I can go to all-time highs and I can think to myself it's an 8% move. I go, okay, well, if it's going to be a 5% move at the 50x leverage, I'll make 2,500%. So I could try every one attempt is 100% of that. So I could try multiple times before I fail. But all that has to do with the price. If I keep entering in and the price keeps falling, well, I'm not going to be silly about it. I'll be like, okay, there's some other trend that's happening here, some other levels, maybe there's a trend reversal happening. But usually I'll enter in if the trend is the same, like I'm bullish and it's going up and it keeps wicking down to liquidate me out, well, then I'll get back in because it's still proving that we're moving up.
So this is why it's very important to have indicators like this, because you can see if the price, if the action is matching the levels that you're seeing on the indicators. The more that you're seeing it's bouncing off of those, that it's reacting or responding to the VWAP, to the volume weighted moving averages, the more you see that it's following what your indicator is saying, the more reliable and the more you can trust that this is a good place to enter. Because if I don't have these indicators and I see it go down to 111, I don't know if it could go down even further. I don't know if this is cratering down 80%, like Bitcoin tends to do. So these indicators help me to make a better decision. Should I place my bet here or not? Do I have that right?
Absolutely. So if I were to take a look at the chart right now, let's say I weren't in, I want to get in. Since I'm in a yellow area and my price is over here, I'm in between, I've already cleared this top level here was already mitigated. This is a daily level that was created from over here, from 2 days ago. But I have a new one down here from today. So I would place a limit order right over here at 112.9, or let's call it 113, right here, expecting the price to dip down, enter in, and then move up. Right? If I was worried about that, I could put another position right over here, which is this trend meeting with the developing daily level. Because I know that tomorrow's daily level, if the price stays where it is right now, let me zoom in, will be 113.6. I know tomorrow that'll be the level, right? So maybe I don't want to risk waiting until I get down here. So I might set a limit order here at 113 and then another limit order here at around 113.6 so that if the price pulls back over here, I get in. Or I might be even more of a Frady Pants FOMO and get in here at 0.5% of my portfolio just to say that I'm in, then have another 1% over here and another 1% over here. but I'm using the indicators and my levels and the trends that I draw in order to get that idea. Do I want to get in over here? Do I want to enter, place another limit order here at this level? Probably not.
Why not?
Because since I was already there,
Oh, I see. You mean like
chances
going forward.
are if I come back, I'm breaking down. Just like over here, I got in, but after it went up over here, not only did not continue its way up, it rolled over and came back down. So over here is not a good price for me to get in, because I've failed the bounce. I have a lower high and I'm rolling over. So chances are I'm headed back down lower. So if this, for some reason, heads over and comes back down over here, chances are we're breaking lower. Not guarantee, but chances are.
Interesting.
So super useful to have these indicators in order to help you guys out.
So if we break lower and you set it at 113 or thereabouts you were talking about, won't you still be washed out?
No, because if it bounced over here, this would be a higher low, which is a bullish trend. If you get higher lows, that confirms a bullish trend.
No, but I'm saying if it continues down past that, but you set limit orders at 0.5, at 1%, 1%, won't you get washed out of those positions?
Yeah, that's always a possibility. But it's less likely to happen. The price is less likely to, or the conclusion you should get to that the price is going to fall should be less likely over here and over here, because price usually bounces at the VWAP level. It's less likely that from over here it nosedives down.
Right.
Less likely. But it could absolutely still happen. All right.
So just before you go any further, if I set at 113 a limit order, and then it doesn't bounce, it goes down, then do I immediately exit my position?
It depends how it's happening. So if it's going down because it's stair stepping down, it's sort of like naturally moving lower. That's very different than if it knifes down.
See.
Right. So if it knifes down, you might be looking for some news. Hey, is there some news that's happening? Could be some volatility. That sort of thing happens a lot during Fed days or GDP reports or CPI reports, where the market's trying to digest the news. And so it goes up, it goes down, it goes up, it goes down, and you can get liquidated and washed out all the time. Right? Where the price goes up and down and up and down. And so just because it knifes down doesn't mean that that's where it's going to go. You can always be in a wick. This is what I always tell myself. I could be in a wick right now. Let me not act crazy. That's why you want to make sure that the bet that you place on, you're fine with losing it. Otherwise, you're gonna be all nervous and squirrely and looking to get out of the position before you should. Like so over here, just to give you that example over here, this candle over here actually went lower than this level over here, right? So you might say, hey, Tom, isn't that what you're saying? If it goes lower, then that means we're probably going to break lower. Well, no, we have to look at the candle close, and the candle close here is actually a higher close. But there are people who panicked inside of this level over here, inside of here. They panicked and they sold, or even went short, which helped cause this move up because they get liquidated. It bounces up, and then it moves forward. So this is actually a clearing of liquidation, a liquidation sweep, and then we moved up. So you don't want to make rash moves while you're inside of a wick. You want to wait for the close of the candle, and the only way you can wait for the close of a candle to make your decision is if your position is sized appropriately. If you have too large of a position, you will not be able to handle emotionally holding that position. There's just no way.
So so my question was going to be, and I'm guessing you don't recommend that you set a limit order at 113, for example, and then set a stop at 110, because it might play funny games and wipe you out when you shouldn't?
Well, set a stop for two reasons. One, if your position's large enough that it makes sense that you don't want to lose your whole position, totally understand, set your stop. That's your stop limit. When I'm saying that I had no stop, my stop is my liquidation price.
Right.
That's what I mean by that. It's not that I'm just like being willy-nilly, I just put whatever on and I don't have a stop. My stop is my liquidation price. But if you have a larger position, then no, your stop, you would actually set an actual stop loss there. the issue with that is that some people, like my old self, will move my stop loss. So if you know for a fact you cannot be relied upon to not move your stop loss, then don't say, well, I'm going to put a larger position because I want to make a lot more money if it goes up, but I'm going to set a stop loss. You won't.
You underestimate my power.
Oh, the other voices in your head, what they're going to do, right? Some people, they can't handle, they'll add to the position. They're like, I should have gotten in bigger before. I'm going to add right now. And if that's the pain you choose, if that's the kind of person you are,
has incurred the sentence of excommunication.
Get out of here. You can't trade. Get out of here. Beat it. You can't trade, buddy. It's not for you. Not for you. You got to choose one of your 4 pains. In too early, too late, not in at all, can't get out. These are the 4 pains. If you got to choose which one it is, and there's a couple of those combinations where, sorry, you got to get out of here. Your trait openness is too high. You can't be president. I'm sorry. You can't be president if your trait openness is too high. Go be a teacher. Go be a health worker. Sorry. Guys, I'm here to help you make money and enjoy yourself doing it. And for that, I need your help. Click like and subscribe in order to help this channel, and share it with anybody else that you would like to see prosper. If you hate your family and friends, don't share it. But if you love them, share it. I'm going to put that on the t-shirt.
Yeah, please do.